Hey guys, so Argo Blockchain down again. I thought I would revisit my valuation that I did back in sort of Christmas time. I did a sort of discounted cash flow model back then, which I don't really think is all that valid for a company like Argo. Sort of predicting that they're going to earn 15% more revenue linearly per year. I just think seems a little bit silly for a company like this. It's going to sort of follow whatever Bitcoin does. The amount they earn is going to follow whatever Bitcoin does quite closely. So trying to sort of put that in a percentage per year, even on average, just doesn't really seem all that useful or accurate. So I thought probably best to do on a model type calculation. So this is their most recent quarterly earnings. It's actually the end of September, so we are sort of awaiting the end of Christmas, I guess, 3 months earnings. But this is the most up to date we have, so I can sort of use my model and sort of update it when sort of more recent earnings come out. So what I sort of do, I mentioned last time, I sort of take their earnings, which I've got on this column here, but I remove the change in fair value of digital currencies, because that to me is just the hodl, if you like, going up or down, which doesn't count as profit. Realised gain on sale of digital currencies, same. I'm really just looking for what they're mining, how much it costs to mine them, and all the sort of associated costs. So that is my net profit. So it's just direct costs and depreciation, and then all the sort of operating costs, share-based payment, which is very important, foreign exchange, exclude loss on the sale of investment or gain on the sale of investment if they do that, because they're one-time events. Keep the interest, obviously, and keep the income tax and exclude other comprehensive income, because that's sort of not really relevant to day-to-day activities. So yeah, that gives me sort of 6 million, just over 6 million in sort of ISA investor adjusted net profit for the quarter. And then you could sort of add on the balance sheet cash that they had at the time, take off the debt, add on the hodl at the sort of price that it was, and I haven't sort of put a PE multiple and sort of valuation for that column, just because it was sort of in the past. So I've sort of taken that and the recent operational updates to sort of how much Bitcoin they're mining per month, and that's with the sort of increased difficulty, and yeah, sort of annualized that before the Texas opening. So I get to 1,578 Bitcoin mined. Now this isn't I haven't sort of just taken it as 163 Bitcoin from the March update and took that all the way through, because I expect the difficulty to be going up quite a bit. So with all the other miners sort of getting more hash rate online, the difficulty I would expect will go up a fair bit. So I sort of took the 163 and dropped that by 4% a month, which may be a little bit sort of extreme. It might be less than that, might be more, but I think that's a sort of fairly cautious approach. So yeah, that would give them sort of basically 1,500 over the old facility annualized, and then so that would come to at $40,000, 63 million in revenue, and then sort of just taken the direct costs from that quarter times by 4 and depreciation times by 4. This may be sort of obviously not 100% accurate. There's other costs that go into those, and it may not just be linearly scaled by 4, but got to do some rough figures. So as I say, I'll update this sort of as more recent figures come in. consulting fees times 4, professional fees and all that sort of thing, general and admin, share-based payment, general admin and share-based payment I've times by 4 and added on 20%, because they're bringing on more staff. They're sort of announcing new chief investment officers, more chief officers, so they'll be getting more share-based payment, so I'll increase that as well. More for the Texas facility as well, even though this is before Texas, and left foreign exchange the same because that's sort of really outside their control. That's just what the dollar is. You see the 9 months previously, it was less than the sort of most recent quarter, so I'll just leave it as that, as an expense. It's a bit rough. So that comes to 17 million operating profit. Interest expense, I've taken what they had on the balance sheet before times 4, and then added on the most recent debt filings. So they had 28 million and a 40 million raise. So yeah, added that on and sort of comes to roughly 2.73 million. Obviously not 100% sure on the interest rates, or we know the interest rate on the more recent stuff is sort of 8.75%, but duration and that sort of thing. So I've just taken a rough calculation on the interest. I wouldn't have thought it would be all that far off. And then income tax, I've taken 30% of the profit, because that seems to be sort of roughly what they've been paying over the previous results. So that gets to an annualized net profit of 9 million, which is obviously not a huge amount. So I've taken, say, 12 times earnings of that, and you get to sort of 115 million market cap, and add on the cash, take off the sort of revised debt with the 2 new raises, add on the crypto hodl at $40,000 a Bitcoin, and you sort of get to a realistic sort of enterprise value of 164 million. So people are clearly pricing in, even with today's sort of, when the last few months drop, people are clearly pricing in the Texas facility. So I've sort of taken the mining amount post-Texas to be sort of, taken the July when they're hoping to have everything open, and sort of divided that by 1.6 exahash and times by 3.7. It's what they're sort of looking to have. And so I get 320 Bitcoin mined in July, and then sort of annualize that using the same 4% drop due to the difficulty rise, and I get to 3,100 Bitcoin mined for sort of post-Texas. So this would be from July, I've put June, but July this year and 1 year after that. So yeah, I get to 3,100 Bitcoin mined at $40,000. This would be sort of, obviously Bitcoin staying at 40,000 for a whole year. Very unlikely, but you have to put some figures to it. And that gets me to 124 million in revenue. So then direct costs, I have doubled the pre-Texas. Obviously they'll have more electricity, more miners and that sort of thing. They are, from what I gather, getting a fairly cheap rate on electricity. Talks of sort of 2 cents, I think, rather than 4 cents. But yeah, I'm just going to sort of stay cautious and double the direct costs and double the depreciation. Obviously they bought all the new miners for the new Texas facility. They're sort of replacing old miners with newer ones, even in the older facilities. But yeah, we'll double the depreciation. I've taken 1.5 times the consulting fees, sort of thinking that there might be a bit of economies of scale, sort of people dealing with both facilities might not be double. Same with the professional fees. General and admin I have doubled. So yeah, I sort of added on 20% to the pre-Texas, but sort of post-Texas I've put as double. Share-based payment, as I say, sort of same as pre-Texas really, where all the new staff are sort of taken on, and foreign exchange left the same. And so operating profit 46 million. Interest expense I've kept the same because they've taken on the debt now. I don't believe that's changing. And income tax at 30% of that. So yeah, you get to just under 30 million in sort of adjusted net profit. Same calculations as pre-Texas with the sort of balance sheet. And so yeah, you get to 12 times the net profit, 358 million market cap, and sort of an enterprise value of 400 million. So we're currently at $377 million using sort of today's price. So yeah, I guess people are pricing in where they're going to be in June. Sort of using this as a rough calculation. Yeah, they're kind of pricing in the Texas facility already, or they've got higher higher multiples that they're using. I mean, you could easily put this to 15 times earnings, and you sort of get 500 million sort of realistic value. You could put it to 20 if you like. 645 million. It's just sort of how cautious you want to be. And then, so, as I say, it's going to be largely based on the Bitcoin price. So I always say these are sort of leveraged Bitcoin positions like gold and silver would be. So if you take all of these figures and just drop Bitcoin to $30,000, you keep sort of largely everything the same. Direct costs aren't going to change. Depreciation isn't going to change. The electricity and the miners are still going to be doing their same thing. Consulting fees, professional fees, and all that sort of thing. Share-based payment. Presume everyone's going to still be deducting their fees at the same price, wanting the same salary. Interest would stay the same. Income tax obviously would come down because they're making less profit. And I get to a net profit of 8 million, even after Texas is opened. So I sort of thought and then, yeah, so the HODL obviously is 2,700 Bitcoin times $30,000 instead of 40,000. And I've sort of assumed if we're coming down to that, people will be less willing to pay 12 times earnings. So I've changed that to 10 times earnings. So yeah, you get to 81 million market cap and sort of 103 million realistic enterprise value. So just a 10,000 loss on Bitcoin. Even I think we are at 38.5 already. So if we come down to 30, you could see sort of potentially 75% drop in the market cap. So it does make a huge difference. And I always say just because it's a stock, it is still essentially a leveraged Bitcoin position. Similarly, on the way up, $60,000 Bitcoin. So yeah, we get to 3,100 Bitcoin at $60,000. Same cost everywhere else, pretty much. Get to 73 million in adjusted net profit. If we get to 60,000, then there'll be sort of bullishness in the market. So I'll put 15 multiple on the earnings, plus the balance sheet. So I get to sort of 1.2 billion in sort of enterprise value. So essentially a 3x from sort of 50% increase in Bitcoin price. If you take us at $40,000, we're a little bit below that, but yeah, 50% gain in Bitcoin basically gets you a 3x in market cap from sort of based on the model. And then you can sort of look at some fairly pie in the sky figures, I guess, sort of $80,000 and $100,000 Bitcoin, just as a sort of long-term stretch goal, I guess. As I say, we'll sort of need the direct costs and all of sort of these figures updated with time, but yeah, you get to sort of 116 million, 160 million net profit. Again, I've sort of increased the multiples. If we were to be getting to these figures, there'll be a huge amount of bullishness. It'll probably overshoot these, to be honest. But sort of 20 multiple on that profit gives you sort of 2.5 billion, which would be 6-7x from where we are now. And yeah, 25 times earnings on 100,000 Bitcoin is sort of 4.2 billion. So just over a 10x. But obviously $100,000 Bitcoin seems rather a long way away. But yeah, I just thought this seemed a better way of sort of modelling things than a discounted cash flow model, to be honest. But as I say, the revenues are basically going to follow Bitcoin now that we know sort of how many miners and sort of the exahash power that they're going to have. So yeah, as far as I can see, I would sort of put it at 3,100 once Texas is opened. So it's going to be this based on the Bitcoin price. So yeah, I thought that was interesting. Let me know your thoughts on sort of whether I've got any of these figures wrong, or if you have sort of input on them. Maybe I've sort of taken the wrong multiples, sort of adding 50% on here, doubling this. Income tax, not 100% sure about, but I've just used sort of 30% from what they've been paying previously. And obviously this would be sort of adjusting over time depending on how much Bitcoin they decide to hold, and sort of taking on any more debt and what the cash is. So I'd sort of cautiously, they haven't really given their cash position since Q3 2021, so I just dropped that down to 60 million, but it doesn't make a huge difference really if you sort of took that to 40 million. That's 4 million. Yeah, if you took that to 40 million, doesn't make a huge difference really. So, well, it does on the very low sort of figures, but later on it's not going to make a huge difference. So yeah, I'll wrap it up, and yeah, leave your thoughts in comments below, and like and subscribe. See you soon.